Google just hit all-time highs at $328 a share, but I just sold. What's up, guys? In today's video, we're going to be talking about why I sold Google and what stock I bought. Give you it all up front. I'm just going to let you know without holding you here hostage. But if you do want to stick around for the entire video, I'm going to go over why I sold Google, the reasons behind it, and why I bought this brand new stock to my portfolio. The stock is Adobe, ticker symbol ADBE. Why did I buy Adobe? Because I think it's in the same exact place that Google was in not too long ago. Sentiment is very poor, and the upside is massive for Adobe that does have a moat. We're going to get into that a little bit later. So without further ado, guys, let's get into it. And I hope you like the new setup. We safely got here. And yeah, let's roll. So let's talk about Google. Google, if you remember, into 2024, into 2025, everybody was very, very bearish on Google. Everybody was saying that they were going to be disrupted. Barron's came out with this on when they come out with this June 13th, 2025. So not too long ago, guys. Google search is fading. The whole internet is at risk. The lifeblood of the internet is dying, is drying up. What the decline of search means for users, companies, and stocks. So this goes along with the sentiment of Google's going to die, their business model is going to die, even though they have the two largest search engines in the world, Google and what you're watching this on right now, most likely YouTube. Those are the two largest search engines in the entire world. And everybody was saying that, well, Google was going to lose that massive moat, lose search to ChatGPT, Anthropic, Grok, and others. Everybody was saying it. We all remember. We all remember. Don't act like you don't remember. We all remember. Everybody was saying, "Oh my gosh, Google's dead. It's dead money. Don't invest in this company." Blah blah blah. And that was, they were sitting at about sub $200 at that time. If we look here, at that time in June, they were sitting about $170 to $180. They hit a low of about $144 during the April crash, or tariff-geddon as I like to call it. And they kept moving up steadily, but the narrative was still there, right? From 140 up to about $200 in August into September. The narrative was there, but we slowly but surely grew out of that narrative. Now, the other piece of this whole thing was the Department of Justice wins significant remedies against Google. This all has now concluded for the most part. And, they don't have this law, they don't have this investigation by the Department of Justice against them anymore. And, that kind of clears up the skies a little bit for Google even more. And then finally, with Google, you have just this big sentiment change. Not only did the Oracle of Omaha, Warren Buffett, get invested in this name, but you also have the entire shift of sentiment, not only on X. I mean, by the way, if you want to follow me on X and see posts from me, probably about 10 plus posts a day, follow me on X at the RonnieV Show. But we've just seen this sentiment. If you just type in the ticker up here and go to news on Google, you'll quickly see that the sentiment has completely changed from earlier this year. From Google's a dying company, ChatGPT is going to eat their lunch, Anthropic, blah blah blah. The Department of Justice, the investigation, they're going to get broken up. Google Cloud is going to get broken up. YouTube is going to get broken up. Blah 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 blah. Chrome's gonna have to get sold off. All this stuff, and now the skies have cleared, and now everybody's flipped to bullish, and we went from 140 to 100 or 140 to $200 range now to all-time highs, hitting a peak of $328 and some change, and now sitting around right around $320 per share. Massive move, and mind you guys, I was getting in at like 140s, 150s, 160s, 170s, 180s, 190s, 200s, 200s, low 200s. And I was buying, 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 and quickly now I've over doubled my money. And it just led me to look at this and say, Okay, so year to date, we're up 69%. But from where I was buying at 146, 150, 160, we've over 2x our money now from that time, right? If we go 6 months back, you might catch it here. No, 86%, whatever. I didn't buy the exact bottom, but we were down here in this 140 to 160, 70, 80 range, right? And you just look at it. Market cap of Google now is $3.86 trillion. $3.86 trillion. So I've just doubled my money on this name in a very short amount of time as an investment. And now for me to double my money again, they basically have to go a little less than $8 trillion in market cap. Now, mind you, if we look at Nvidia, the king of this whole AI movement right now, they are sitting at $4.38 trillion. Now, Nvidia is another great company, but again, for you to double your money on this company, you would have to move this one over $8 trillion market cap. Do I believe that Google and Nvidia will one day be $8 trillion market cap companies? It's possible, but how long is that going to take? Is it going to be next year? I certainly don't believe so. Is it going to be the year after that? The year after that? Will it be within the next 5 years that they double again and hit $8 trillion market cap? Within the next 5 years? Maybe, but it would probably be at the tail end of that 5 years. So I just don't see, and honestly, I don't really believe. I think that would be a huge stretch to go from 4 trillion to 8 trillion. And if you just look how long it's taken them to get to 4 trillion at this time, pretty crazy, honestly. So the sentiment has changed on Google. Google has seen a very outsized large move. And if we just look at my valuation models, we'll quickly see that if we just look at the quick little snapshot here, $265. And this is, mind you, this is on bullish assumptions. Bullish assumptions, $265 discounted cash flow intrinsic value, 21% margin of risk. They're 21% overvalued. Based on EPS fair value, they are 15% overvalued. Great moat, great technicals, great valuation, great growth, great health, great company. Not saying it's not a great company. Not saying that you should sell out of Google yourself. Me personally, I like to pivot to where the sentiment is most bearish, but also I believe in the company and see that they're undervalued and they have a strong moat. Or, like some of the some of the gem companies that I talk about, like Oscar and Zeta, those are a little bit more speculative, but I still believe in them strongly long term and believe in their valuation. So if we look at Google's chart now, we're going to see something, and I'm going to bridge this all with Adobe here very shortly. I just want to kind of talk about everything, right? We talked about the valuation being extended on Google on bullish assumptions. I like to be buying in companies conservative base case assumptions and be getting a very nice margin of safety. That's when I like to be buying into companies, not whenever there's sky high valuations or valuations are stretched and you're not getting as good of a risk to reward for your money. But it's funny. 2028, or sorry, 2028. Geez, we're not even 2028. 2008 and 2009, we saw RSI down to about 36.46 on a monthly chart for Google. Then we hit that again in 2023, right there at the end, 2022, right there at the end of the bear market. Now, those are the two lowest points that this company has been. Besides that, besides outside of crashes, basically, if you just draw a line across, we've been able to hold 46 ish on RSI multiple times, multiple times, multiple times. Now we hit it again here in April lows. So this was your buying point, especially when you believe that Google was undervalued. And it came right down here to the axis or the 13 EMA, right? Came right down here and bounced right there. So this was your time to be buying, not up here. A lot of people are saying buy Google here at 320. And sure, if you're very, very long term minded, I'm sure it will be a decent buy, but will it beat the S&P 500 or the QQQ? I don't know because you're buying it at a very, very hefty premium, a very hefty premium. So you had your RSI here, but now your RSI is at the highest point it's been only one, two, three, four. I'm discluding its its IPO. One, two, three, four other times. Now you're right there again at this extremely overbought area on the RSI. Extremely overbought. Now you want to be buying here. When I was buying here, you want to be buying when it's around this 50 line on RSI, not when it's literally overbought and things are so extended. And this has just been a straight up roller coaster ride. And you're at the top of the roller coaster and you're about to roll over and then you got to go down, right? You got to go down, you got to reset these things and you got to correct. Google's going to have that. I don't know when. Man, I'm just not here to sit in a company, great company, but I'm just not here to sit in a company that has ran this much and given me such a great return on investment, ROI, in such a short amount of time, guys. I mean, we're literally talking about, you know, 6 months, 5, 6 months, over 100%. I'm just going to take what the market gives me there because you could see Google keep running, but eventually it's going to get a little too stretched from its valuation and it's going to have a mean reversion back, maybe down to 200, 220, 240. And then maybe where the business is then I could look to scoop shares back up and go back into Google for the long term. I just don't really see the great risk reward as I was anymore. But that brings me to Adobe, right? And one more thing, I'll bring up my high five snapshot Excel spreadsheet here. You can see a 30 terminal value, multiple cash flow. Their free cash flow yield is sub 2%, not that great anymore. They're sitting at 30, forward of 29 PE, very extended, very extended. Not crazy high PE, but not crazy good PE either. I mean, yes, they're a moat and everything, but I don't want to be buying this in the 30s. I want to be buying this in the low 20s. Or it was at like 15 to 20 range there for a little bit. Peg ratio looks good. But yeah, again, 21% margin at risk. You would only be looking at an annual CAGR, again, on bullish assumptions, 14% revenue growth dropping down to 8% by 2034. Remind yourself, there's a very, very big company. 8% and 9% CAGRs on DCF EPS over the next 10 years. You are not beating the staple S&P 500. You're not beating the QQQ. On average, you are underperforming the market by buying in Google today and holding. I'm good. I'll pass. I'll move on to Adobe because what I'm about to show you, and again, bullish assumptions, only dropping to a 20 PE by 2035. And you see that today it's 15% overvalued, 15% overvalued, 21% overvalued. Now's not the time to be buying. Now's the time to be trimming or exiting stage right. So we talked about all that. Let's talk about Adobe. Adobe. And one more thing. If we look at the valuation here on Simply Wall Street, they also have this as a 10.6% overvalued on Google. They think fair value is around 290, kind of aligns with where I'm at, right? Between that 260 and what do we say, 260 and 280 range. They're a little bit more bullish than I am, maybe very bullish assumptions. But again, $3.9 trillion market cap. They're saying it's 290 fair value. I'm saying it's like between 260, 280, and you're sitting about 320. The hype has hyped a lot. Warren Buffett's in this name, and things are just getting a little bit euphoric in Google, I believe. Could it keep running? Of course it could. Could valuations get stretched? Of course it could. But again, I'm looking for undervalued companies. I'm looking for the next Google to run. And to me, that is Adobe. Adobe, guys. Adobe is a moat. You can believe it, you can not believe it, but Adobe is a moat. Anytime I've tried to do something, sign a document, put together documents to send to somebody, XYZ, I need PDF. PDF is like a lifeblood for me, and it's a lifeblood for businesses. It's a lifeblood for taxes. It's a lifeblood for so many different things. Then you have Photoshop. Photoshop sits there, and yes, they've been a little bit laggish to the AI movement, but they have now fully, fully made that flip with Photoshop, and their AI agents and their AI product in there is actually pretty solid. Pretty solid. And mind you, again, AI is not to the point where you can just easily just describe something and then it kicks right back like, "Yep, here you go. Here's a great picture, just like you asked for." We're not at that point yet. I don't know when we get to that point, but we're not there. I can't just say, "Give me this exact picture, give me this exact whatever," and then it gives it to me. It typically doesn't give me what I asked for or makes it all messy or whatever. So we're not at that point yet. So people that believe like, yep, Photoshop's dead right now for all these companies is just ludicrous. Companies, especially big companies, aren't just using AI, typing in, I need this picture, and then it's just spitting it out and they're using that for their business. It's not there yet. People are still using Photoshop or Canva or other products, right? They're still using these things. We're not yet there. And I don't think we're going to be there really within the next year or maybe 2. I don't know. This doesn't feel like we're there yet or we're going to be there in a short amount of time. But anyways, say what you want. Adobe is a moat. Adobe is a moat. You need PDF. Businesses need PDF. Businesses need, for the most part, Photoshop. And then they also just made an acquisition of SEMrush, which is a basically social media marketing company that helps enhance those areas, which Adobe is, they're in that area as well, and they're trying to build that up as well. Now, just so you know, I think Zeta is coming to play. Zeta Global is a monster in the marketing space, and I think they're going to be massive, absolutely massive, guys. If you haven't heard my Zeta commentary, I don't know what you're doing. I talk about Zeta so many times. I talk about Zeta so much, and I think Zeta is just going to be a marketing technology beast, right? And they're going to beat out companies for the most part like Adobe and Salesforce, and then Oracle's leaving the space. So I do think that is going to be a monster in that area, but it doesn't mean Adobe can't still get good business and still have business from that area. But mind you, again, that's not their main area. Their main area is PDF, Photoshop, an ecosystem of tools for companies, a SaaS company, a subscription as a service company like Adobe is, where companies keep on paying them monthly recurring revenue every single month, month in, month out. And people forget that these companies, they command a very, very typically a very high price to earnings ratio, typically 30 to 40 range, maybe even 50s, depending on the growth. But because you just know that monthly recurring revenue and annual recurring revenue is coming in over and over and over and over again. So earnings, growth, EPS, they're all more predictable. So we've kind of lost our way with that because everybody's scared about AI being a big disruptor in this space. And yeah, there's definitely companies out there that will be disrupted in a massive way. I just don't believe Adobe is one. I don't believe they won't be disrupted a little bit. Don't get me wrong. Like even Google will be disrupted some. I just don't think it's enough to sit there and say, yeah, Adobe's not a good buy right now, or Adobe's a crap company, or Adobe's going to die. I don't see that. They're buying back their own stock like crazy right now, like absolutely crazy, guys. They're buying back their stock in a massive, massive way. And so if we just look at the valuation here, which really, really intrigues me beyond, just the fundamental moat that I believe they have and the stickiness of their business. If we look at the fundamentals, you'll quickly realize why I'm so interested and why I made this pivot from Adobe, or sorry, from Google to Adobe. So let's go through it one by one. First, 132, $133 billion market cap, plenty of room to grow up to $1 trillion market cap. Don't know when that happens. Don't know if it happens, right? I'm just saying 132, 133 billion up to 1 trillion seems a lot simpler and a lot more growth and opportunity than 4 trillion to say 16, 20 trillion. Okay. To get a big return on your investment, right? Or have a multi-bagger we were talking about with Google, right? So the past year down 38% on Adobe, the past or year to date down 28%. So the name's in the gutter here. The name is in the gutter. And honestly, if we just quickly look at our snapshot, again, if you come in here, this is our investing, High Five Collective investing Discord. If you want access to this, I will leave a link in the description below, and I'll probably pin the comment down there as well if you want access to our investing Discord. This is where you can see my gems portfolio, which are sub $10 billion market cap companies that have big upside, and then our collective portfolio, which is our more stable portfolio, but just larger companies, 10 billion plus, and we're really looking for companies that are super undervalued, like we were buying into Google and like we were buying into Meta in 2022 and 2023. Like we were buying into who else? UNH that's had a really nice bounce since its lows like 250 to 275. So yeah, that's kind of what we aim at doing in these two separate portfolios. You don't have to follow my moves in either one of them or whatever. It's just I post a lot of content in here, post my investing thesis, post a lot of charts and updates to the snapshots. But if we look here at Adobe, right, we can clearly see DCF intrinsic value is 457, 465 for EPS. You're sitting at a 30 to 31% margin of safety on this company, with EPS continuing to grow like a weed, revenues continue to grow like a weed, and free cash flow continuing to expand like crazy. We already know what Adobe does. Their technicals don't look that great. They're kind of like a falling knife right now. Their growth is, it's going to be high single digits, low teens. Valuation is definitely up there. Mode is up there and health is up there. Their balance sheet looks great. The company overall is, like I said, buying back shares like crazy, which is doing basically what Apple did and expanding their EPS margins and EPS like crazy. And again, 30% and 31%. This margin of safety is based on really base case or bear case. Base case or bear case assumptions here. Base case or bear case assumptions. Now, to go into it a little bit deeper on my Excel spreadsheet, a 15 terminal free cash flow multiple, a 15 when SaaS companies in this sector typically command a 25, 30, 40, right? Again, I'm being a bear. I'm being a bear on Adobe right now. 40% free margin rate, growing to 43% over the last 5 years. They're currently doing 41% free cash flow margin rate. I'm being a stickler with the growth rates. I'm keeping them very tight and small. And then we sit here and see that your PE is a 15, your forward PE is a 14, your PEG ratio is pretty good. And then your free cash flow yield basically 7% across the board, forward and current, 457 current fair value. We can see the farther that it goes. If we do see 275-ish, we're sitting at 40% margin of safety. I will be scooping up shares like crazy. And you can quickly see that you are going to get 11% return on your money, 14% return on your money compared to Google, where you were getting an 8 or 9%. So your return on your investment and your compound annual growth rate is going to be way better. And again, Google, this is being very bullish. This is being very bearish. You see the difference. When we are very conservative on our assumptions and it's telling us screaming buy, compared to when we're being very bullish and it's saying screaming sell, screaming sell. You see the difference there, right? Trying to really simplify it here for everybody. We want to be conservative and we want to buy when we are conservative, and then it tells us we're getting a great deal. We did the same thing with Google just a couple months ago. Did the same thing with Google just a couple months ago. And people were calling me dumb and an idiot. Why are you buying Google? That's so dumb, blah, 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 blah. And now they're saying the same thing. You're an idiot for selling Google. Why would you do that? Adobe, oh my gosh, that's a dead business. AI is going to disrupt it. Adobe's going to be dead in the next couple years. Maybe, but I don't believe so. So we'll just have to see what happens from here. We'll have to see which company has better returns. Was it a good move selling out of Google to get into Adobe? Well, if Adobe goes on a big run and they continue to perform like they do, and they get back to at least even half, at least half the PE or the valuation that they used to have, at least half, they're going to massively, massively outperform Google's returns for the next 2, 5, 10 years. So we'll just have to see. But everything looks really good here. Again, you could see again a 20 PE for the next 10 years on Adobe on their EPS when they're simply going to be buying back shares like crazy. And these numbers again are super conservative. I can see them pushing 20% plus growth on EPS, guys. They're buying back so many shares right now. So many shares. So we look at Adobe here, right? We look at the chart and what do we see? Why is this such a great buying opportunity, in my opinion? Well, if we zoom back, dinosaur, very beginning of this company, 1987. 1987. This is a monthly chart. Look at the only 3 times that we saw this level of selling, this level of being oversold on the RSI. 2008, 2009 housing market crash, 2022 bear market, up 2025 AI is going to kill Adobe. You're not quite down here to bear market lows, but let's see. You already surpassed, where was COVID? Oh, COVID's right here. So you have COVID lows, bear market lows. It could come down here to 270 to 280. I would be buying up shares like crazy at that point. I'm not like fully invested right now in Adobe. I'm just kind of nibbling as we continue to go down, but it is a great buy here. And like I said, if we do get down here to this 250 to 280 range, then yeah, I think there's very strong support. And I think we hold there. And the RSI says it all, guys. If you think this is the one time since 1987 that we're just going to keep going low, 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 and we're going to break under 30 on RSI, and it could happen. Guys, that would be crazy. That would be crazy. I don't see it happening because the business model is still great. It's screaming undervalued. Somebody eventually is going to step in. These companies are eventually going to realize, okay, Adobe's not dying. Their revenue keeps going higher. Their free cash flow keeps going higher. They're buying back shares like crazy, and they're not being disrupted as we thought they were. Okay, I'm in, says the hedge funds. Says maybe Warren Buffett. I don't know. But look, this is what I'm seeing. You don't have to agree with me. You don't have to do the same thing as me. This is the great thing about investing. I'm going to do me. I'm going to invest in companies that I like, and you could do you. If we look here at Simply Wall Street, they have a $578, basically $579 fair value on this company. It's currently sitting at 320. Mind you, I'm sitting there at 457 and 465 on very conservative or slightly bearish assumptions, guys. They're sitting at 44% margin of safety or undervalued, $579 fair value compared to $320 today. So almost another double, almost another double if you bought in today. I could see it. I could see it. This video is getting a little long, so I guess we'll cut it short here. I do plan to make a more in-depth video on Adobe here in the future, maybe going over a couple more things. But guys, I do believe this is a moat company. I do believe personally, I made the right decision to go ahead and take my gains off the table with Google, exit stage right, and pivot into Adobe. Now I did buy some other companies as well, but I think that'll be for another video with my Google funds. But yeah, I think it'll be for another video. I appreciate you all. I hope you like the new setup. It's still getting worked on. Still getting got my new desk and everything coming, and some other cool things. Gonna get some more wall what's it called, foam wall things, whatever, um voice cancel, I don't know. It might be a little bit of an echo in here that I hear. Should it'll be gone by the next video I make, or next couple of videos. I do have some more wall panels coming in that I can put up to kind of get my office a little bit more sounding good. So I appreciate all of you guys. I hope you had a great Thanksgiving. Um, I, I'm blessed. I'm blessed, and I appreciate you all. And I hope you have a great weekend and happy holidays. Since I didn't get to tell you before. Oh yeah, and Black Friday deal on our Discord right now. I forgot to mention that we're doing 20% off. I'll link that down below as well. Thanks, guys. Have an amazing day. I'll catch you guys in